Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, I appreciate all the positive feedback, so I figured I'd do a follow-up here and get into a little bit more detail. And a lot of people that aren't familiar and haven't learned technical analysis say, you can't predict what a stock's going to do, and technical analysis doesn't pretend to do so. And what it does is outline key levels to be watching in terms of establishing your game plan and managing your risk and reward of your trades. So it's essentially, after I learned technical analysis, I stopped asking the question, why? Why is this happening? Why is it going up? Blah, blah, blah. Looking for a news reaction or, trying to decipher what's going on, when really, once you learn the candlesticks and the psychology behind it, trading makes so much more sense and it becomes a lot more clear in terms of being comfortable. And as you know, being comfortable is one of the most important parts to making profitable trades. So here's what I'm just going to open up my brain a little bit more as to what I would be looking at. So in the last video that I did that was a little bit more broad, I was looking at the daily and the weekly timeframes and was pointing out how APH and ACB are extended to the upside. There is not an indication of profit taking coming just yet, but we know due to watching thousands and thousands of charts that when stocks get this extended to the upside, normal healthy consolidation is coming in the near-term future. So what I would do in order to number one, look to lock in profit and exit the trade with profit. And then number two, what would I be looking for if looking to re-enter and maybe either buy back more shares or lock that profit away and re-enter for the same amount of shares? So we'll start with APH and then we'll look at ACB as well because they're both above the upper Bollinger Band and they're both fairly extended to the upside. So keeping an eye on APH, the first thing that I'll do is check out the 5-minute time frame. And here is Friday on the 5-minute time frame. So we know that APH has been progressing very strongly on the daily time frame, and let's pull this up here. So APH, I don't know if anybody else keeps typing in APHV, but I feel like multiple times a day that's what I'm doing. So we've got APH to the upside here above the upper Bollinger Band in full breakout mode, and we have seen 8 green days in a row. So the past 3 days, big time gains to the upside. So I can say, okay, I want to lock in my profit and I want to reload once we consolidate. So how do I know where to lock in profit? Well, you can either sell on the way up, and that leaves a little bit more opportunity to get out too early. And again, I want to emphasize you're never going to make the perfect trade. You're never going to buy at the bottom and sell at the top. There's always going to be a better entry, and there's always going to be a better exit. And of course, not always. Sometimes you'll nail the top. Very rare, but you shouldn't be standing there and lamenting about the trade and saying, oh, I could have done this, 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 or this. If you made profit on the trade, that is your goal as a trader. Make a profitable trade. Do it consistently. And that's what more could you possibly hope for? You could hope for more gains. That's a little bit greedy. You could definitely look to yourself and say, okay, I want to get better at maximizing my profit and knowing when to exit, and then use that as motivation for education. That's an absolute great way to do it. But if you're just standing there and say, oh, I did it wrong, I could have done this, and then this would have happened, it's really just a waste of time in my opinion. So at the least, use that as motivation to learn more. So as of right now, looking at APH, on the 5-minute time frame, I would look at the 5-minute time frame action from Friday because I can see a big time move to the upside, and I would be looking for support levels. And so I could say, okay, what level breaking would have me be a little bit worried as a bull that consolidation was going to begin happening now? So I can see we had that nice run up at the end of the day, but look at these levels where we consolidate. Every time we consolidate and form a base of support, that's a level where the bulls show up and essentially say, okay, we're done pulling back. This is our new support level. Let's continue to the upside. So the low of the most recent consolidation was 771, and we hit it twice and then headed up on the run up into the last 2 hours of trading. So the first level we could be looking at is 771. So if I wanted to exit, if that level broke, I would put my stop loss at 769. I always want to give a little bit of wiggle room below a support level, because oftentimes we see a quick dip right below it and then the bulls show back up. And then 770 is a psychological round number where there'll likely be more buy orders and more bid support at that level. So I would put my stop loss at 769 if I wanted to be watching the most clear support level from where we currently stand. And could it break 771 and then the bulls rally at the end of the day and we see a strong close looking for continuation? Absolutely. But what we're doing is looking for the most odds in our favor. And I know that statistically speaking, from watching stocks trade, and the more charts you watch, the more you have historical data stored away in your brain. I've seen this before. I know how this usually plays out. So I know that the odds of a bearish reversal candlestick on the daily time frame would be more significant if we break 771 support on Monday morning. If I want to give a little bit more wiggle room, I go down to the consolidation low from the bull run up first thing in the morning. That was down at 761. So same thing, I would put a stop loss at 759. And if I wanted to use the low of the day, it was 747, and I would put it at about 745, maybe 744. So those are 3 stop loss levels that I would pick out from Friday's trading action if I wanted to keep pretty tight stop losses and lock in those gains. If I wanted to give even more wiggle room, I would be using the upper Bollinger Band on the daily time frame, and I would say, okay, if we're heading into the end of the day and it looks like we're going to close below the upper Bollinger Band, that's when I would exit, because I know that losing that upper Bollinger Band indicates that consolidation is a lot more likely in the near-term future. So those are just 3 levels and an upper Bollinger Band that I would be using. And if you wanted to look at it a different way and get some more levels, I would look at the hourly time frame, and I would look at the 5-day hourly chart. And need to resize this to fit. So every time, same thing. Every time we consolidate and find a low of support, that is a support level. So I can see that 771 level here. It's just a different time frame. And I can see down to 761. Then I'm looking down at 737. And there we go to 703. So I just picked out 5 support levels from one chart where the bulls found support and then saw a continuation to the upside. We had a nice bull flag pattern after the bull break, nice healthy consolidation before continuation. And what also stands out to me, no hourly candlestick has closed below the 4-period exponential moving average, this red line. So that's another thing that I could use as an exit point. I could say, okay, the first hourly candlestick that I see close below the 4-hour exponent or the hourly exponential 4-period. Let's try that again to not confuse you. The first candlestick that closes below the 4-period exponential moving average on the hourly time frame, that is when I would exit. And that is because ever since this bull breakout happened, getting above that 699 resistance, we have not closed below it in 3 days. So that is a level that I could keep an eye on. And as of right now, it's at 785. We'll have to see where it updates at the open on Monday, but that's another level to use. Let's do the same thing for ACB. We'll look at ACB on the daily chart just to get a quick glimpse of where we stand there, and then we'll zoom in for more details. So ACB on the daily chart, nice strong close at the high of the day, a couple gap ups. The more gap ups I see in a row, the more that tells me the bulls are exhausting themselves to the upside. We've seen some solid volume behind these moves, but in terms of wanting or in terms of anticipating when consolidation is coming, the gap ups indicate consolidation more likely than not. So here we had back in February, also looking at previous price history, what happened the last time we saw 3 gap ups in a row. We saw consolidation and we traded sideways. We did end up seeing continuation to the upside, but that was 4 days of pullback where the gap ups indicated the bulls were exhausted, the upper wick showed some profit taking, and then we saw a pullback down to 246. So we went from 262 to 246, an opportunity to reload perhaps for some cheaper shares. So same thing here. Look at how similar this pattern is. And not exactly similar, but we had the gap ups, the big bull run. We consolidated for 4 days, and then we saw continuation. And we saw another couple gap ups and then a bearish reversal candlestick before a more significant pullback. Here's our gap up move. 3 days of consolidation, bulls showing back up, and here's our second leg to the upside, and it's a higher high. So that obviously favors the bulls by getting to higher highs. And actually has not happened yet. So if we can break 284, then we have higher highs. That's a very key resistance level to be watching on Monday for ACB. 284 needs to break to get that higher high. If we see a bearish reversal candlestick with 284 or less as our top, that would indicate the consolidation is even more likely to come. So APH is in blue sky breakout. There's a lot less resistance at these levels where ACB is still working against previous price history resistance levels. So 284 is a big number for ACB on Monday. So that shifts my game plan. And I would say, okay, if we cannot break 284 in the first hour of trading, I'm going to be more cautious and I'm going to be even more likely to lock in my profit and look to reload lower. And then after I lock in that profit, say the bulls show up in the afternoon out of nowhere, I could get in on that bull break of 284. And yeah, I might give up a couple of cents to the upside, and I could say, oh man, if I just stayed in, I would have made 3 more cents to the upside. But in reality, what you're doing is you're protecting your profit. You take that profit, you wait to see if the bulls have strength, and then they prove that strength to you, and you get back in the trade when the bull momentum is continuing to the upside. So here on support, you can see we hardly consolidated on the hourly time frame back on Friday. It was just all green straight to the upside. Look at how overbought this hourly RSI is. It's up at 84. That is overbought considering we are not at blue sky breakout. When we are at blue sky breakout without previous price resistance, the RSI matters less on any time frame. So looking back at APH on the hourly, we're up at 84 here, but it means a lot more to me on ACB, like I just said, because of the fact that we are not in blue sky breakout. So we're coming up to a key 284 resistance with a very overbought hourly RSI, and I know consolidation is coming in the short term. Look how many green candlesticks we've seen. We've seen 5, 10, 11 green candlesticks and 1 red one in the past 12 hours. But no consolidation is coming. So I can't find much support on the hourly time frame from Friday's trading action. I need to zoom in for more detail. So I check out the 5-minute time frame. I can see we built a base here at 276, and we have a support at 272. And again, putting a stop loss a couple cents below those levels to give a little bit of wiggle room. Those would be the levels that I use if I wanted to be out. So let's say we can't get over 284 in the first 30 to 60 minutes of trading on Monday, and we pull back and we break 274 here. There's another support. So you can pick support here at 272, 274, and 276. It's going up by 2 pennies here. So if we do not break 284 in the first hour of trading and we break 274 pulling back, that could be my exit point. So there's all kinds of different ways that you can establish your game plan based around the price action, looking at these charts, and they help limit the risk and get that reward to be maximized. In terms of upside, if we break the highs and see continuation and continue the 5-minute higher low and higher high pattern, if APH doesn't close below the 4-period exponential moving average on the hourly time frame, we know to continue to let those profits ride as the bulls still have momentum. So it's going to be a very important day on Monday for ACB at 284, and we will see how much upside APH has left in the tank. If we don't break those resistance levels I pointed out, obviously the bulls are still going. So that's a little bit more detail and what I would be looking at to establish a game plan. I appreciate you watching, and we will see you next weekend.